On this episode of The Sacco Way, guess who? Let me serve you the torture. We're going to be looking at the biggest Sacco in Kenya, Mwalimu Sacco, built by members for members. The Sacco Way.
I joined the Sacco in 1981, and indeed my membership number is 3389. And I want to say my late wife's number was 3390. So we all were members of the Sacco, and over the years we got benefits, access to loans to pay fees for our children. And Mwalimu, and I'm still a member up to now myself. Because you join as an ordinary member initially, and you stand to benefit from the pooling of resources for productive and provident purposes, as they said then. I remember my first loan, which was processed, went towards the Mwalimu Shamba. I got a loan of 30,000 shillings and about 10 acres from Mwalimu Farm. Because we shared with my late wife, she got 4 acres and I got 6. They did not, of course, need any collateral. All you needed was the savings you had with the society. And later on, I joined the management of the society round about 1981. We're going through an election and became immediately a member of the education committee. I still hold the society in very high regards. I particularly like the interest rates they offer for their fixed deposits and the products they have developed. So I sleep easy knowing that my funds are secure in my Sacco.
What's unique about Mwalimu National is that we have presence in all the 47 countries. That is in Kenya. So if you go to all the way to Lamu, you find Mwalimu National members there. You go all the way to Busia, you find Mwalimu National members there. You go all the way Kwale, the other side, you find Mwalimu National there. So we are actually having presence in all the 47 countries. But of course, we have also casted the net wide and of course focused on some of the membership areas that we haven't been before. And not only teachers as well, because that is what people perceive Mwalimu National to be, but we now have very interesting members drawn from other institutions that we have, including banks as well. This year is a totally different year. As we speak now, we are closing on a loan book growth of around 1.5 billion. Of course, as we give out, they also repay. But of course, the net increase is around 1.5 billion. And our expectation at the end of the year is we can give at 5 billion. That would be one of the most, the better thing that we've done for the last 3 years. And of course, we expect that also translate into the revenue that we'll distribute at the end of the year and also the retention to cover the aspect of the capital adequacy and in terms of addressing the liquidity as well. So that's basically what we're doing. We have also brought in some policy interventions that are meant to ease the lending conditions for our members in terms of patronage. We have also relooked at our product profile where we have gone to the green products as well. We have also looked at what is it that we can do to our members in terms of the lending that gives them easy access to funds other than the traditional guaranteeing model. And you've seen the uptake actually pretty good. And one of the things that has supported that, if you look at our deposits growth, we have seen actually a net increase of around over 3 billion, and that speaks to even the cash that we're holding as well. From our own analysis, we're seeing a lot of borrowing going to the construction sector, and a lot of our members are doing properties within different jurisdictions across the 47 counties, and quite a lot of them are coming for the higher thresholds of our loans that actually for those what you call the senior membership that are 1 million and above, and of course the threshold of 15 million. So there are quite a lot of construction going there, of course, followed by agriculture, We have members, as I said, in the Rift Valley region. I mean, most of them are borrowing to fund agriculture as well. And of course, that gives us some comfort in terms of creating value to the membership as well. But again, we also look at the members not only by virtue of what they bring through their payslip, but they look at them in terms of our wallet. What is it that they're doing besides the normal payslip? And that also speaks to how much are they able to borrow. So when you look at the member in terms of their ability to access credit, we don't look only at the payslip. We look at what other business are they doing. And many of our members actually are able to pass their proceeds through the Sacco.
I joined Mwalimu around 1992, thereabout. And that time, our incomes were small, and even the loans were small. I've stayed with Mwalimu because even when they introduced the pro rata, which some thought was negative, I took it positively because it helped me improve my savings. So they kept giving us loans, advances, and eventually they gave me quite a big loan as a super saver, and that is the money I used to construct my rental houses at Igoji. But most of the money that I've been using in developing my farms is from Mwalimu Sacco. Like when I wanted to make my dairy farm lunch, I required well over $1 million. And Mwalimu came in handy, so I went to Githongori and bought about 10 cows. And that's how I started. Initially, my dairy farm was quite big. It had risen to about 60 dairy cows, but I've scaled it down to 15 cows, including the Eps5 and the calves. This is because I wanted to diversify into crop production. My coffee is about 7,000 trees, although they're in a young stage, about 3 years. My citrus farm has 1,800 trees. My plantains are about 3,000. I also have avocado, about 300 trees, and pigs. We have a few pigs, about 7 of them.
In the financial services sector, one thing that you normally sell, first of all, is trust. Many people probably know us as selling money, but of course you sell trust. No one will give you their money if they don't trust. So that trust, first of all, must come into play. Then, of course, how do we demonstrate value in terms of ensuring that members, when they're coming for loans or access to credit, they go for loans that are relevant to their needs. And many times we also limit those loans for consumptions to a certain amounts that are not very, huge. But of course, we do that, and of course, we do most of the online, but we also do what you call stakeholders, fiscal stakeholders engagement. Actually, we are just done. We're doing all 40 branches across the country where we met our members. They came. We also do the online one because you see the current generation are not interested in physical engagement. So how do we reach them? Which, of course, we normally do, have those online engagements, and of course, they are also able to ask questions in terms of what is the need for them. And that's how we model the financial literacy program around what we do as well. We absolutely have the digital platforms that our members are able to access. Of course, we have the obvious one, which is the mobile banking platform. They are able to access their finances. They don't literally have to walk to any branch unless they really want to. And so that service has also given them a lot of convenience in terms of members who are actually very far from the branches because they can't reach all our branches. So they're able to transact, they earn through us. They're able to request for some information. But we have also added what you call a member portal. A member portal whereby they're able to do querying in online, they're able to get services online, they're able to update their records. And we are now moving to a platform whereby they are doing, or rather applying loan digitally, and we are able to, process that and have them access that through the digital funds. We actually implementing currently a platform whereby we can access someone's credit ability without going to the guaranteeing model and looking at all other parameters other than the guarantee model. And one of the things that we're seeing is that there's a lot of, it's getting a lot of traction, and members actually are going for that kind of a lending other than the guaranteed model. And that's basically is the future of the lending within the Saccos, because the guaranteeing model is becoming a little bit difficult to entrench, a little bit difficult to enforce in terms of recovery. So we actually write in terms of the digital lending, which of course covers that aspect of risk-based lending. As a first pillar, we really focus on how do we ensure that our member services are top-notch in terms of the turnaround time, in terms of the quality, and in terms of also being more proactive. And one of the things that we've been now very intentional about is how does the ESG work for us to ensure that we gain that traction? How do we work with communities, which of course we have started with communities, and of course that also gives us a lot of latitude in terms of bringing membership. How do we also work with our institutions, which of course our members work, to ensure that they have the infrastructure, right infrastructure, to be able to run those schools, including putting up what you call the kitchens that are run by gas other than the firewood. How do we also tap into some of the funding, which of course is one of our key strategies that mobilize some of those institutions that fund the green energy lending. And we've got a few that actually are willing to come and work with us to avail those funding that are more geared toward the green lending. And that is basically in a nutshell how we look at it. But of critical importance is how do we engrave the ESG agenda in our growth to ensure that as we grow our business side, how do we work with communities to become more appealing and become more sustainable?
Engagement with the Sacco is the best engagement one can have, because you get a loan that you repay softly. Even when there are problems or repayment, the Sacco listens. Unlike the commercial banks will rush to sell your property, but the Mwalimu will listen. They will sit with you. They will listen to what you are going through. They will advise you, and then you move on. I think the best engagement is with the Sacco. In any case, the repayment is friendly, it is scheduled, and within one stretch.
I'm Xavier Wanyoro, formerly Senior Principal Lecturer, Kansas Teachers College. I joined Mwalimu Sacco in 1970s. I joined the Board of Management in 1987. And I'm very happy with Mwalimu Cooperative or Mwalimu National, the way it has promoted teachers all those years. When I joined the Sacco, Kenyans were not familiar with savings and credit Saccos. Actually, the government was introducing savings and credit Saccos. So the management was not very serious. And that prompted the government. Initially, it was in a ministry, the cooperative movement was in Ministry of Agriculture. Then it came, and later on the government formed the Ministry of Cooperative to boost the movement. So the government was also encouraging people to form savings and cooperative credit societies. I would request you all to join the Sacco so that you can be able to develop yourself and be able to save for your future and for your retirement. Mwalimu Sacco specifically helped me a lot. And I'm what I am because of the Sacco.
When I came to Mwalimu, I was employed on 19th September 1980. Having left Ministry of Water Development, by then it was in the industry area, because when I joined there were so many things I couldn't understand. One thing I didn't know about what is a cooperative society, what it does, because in the Ministry of Water, I had worked in various departments. The last one was the geology department. So I came to understand you can't get a loan until you are 6 months old in the society. So the 6th month, I applied for a loan. And you remember by then our salaries, I was getting a salary of $885 plus for house allowance of $450. So the first, and I understood the 3 times your contributions. You know, contribution were 100, 200, because out of 885, deduct statutory deductions. What are you left with? Very little. I applied for a loan of 1,500. That was a lot of money to me because it's double my salary, more than double my salary. In fact, I bought some things here. And my husband, who was a little new about it, made us buy some things I don't know why. Even he was excited at the same time. Now from there I learned a lesson. Hey, there's a loan, not a donation. You have to pay. So from there I added my contributions. Now with the aim of getting a better loan, a bigger loan. Together with my husband, we decided to do something meaningful. We bought pieces of land here and there, just to be there. And then at the same time, my children were growing. They started going to high school. There was school fees loan, which helped us a lot. We never struggled so much. We struggled paying back, but it's bad to struggle to pay back, but already you have managed to pay school fees. All my children went through their education with the Mwalimu loan. And after that, they are now grown up. They have their own families. When they were all gone, because my salary still was little, my husband didn't have much money, so we could not have done much. So what we did, before I retired, that's when we bought this piece of land. They call it prime area. It's expensive, but we managed, still with the Mwalimu loan. We managed to build it, and by the time I was retiring, this house had gone about 75%, still with the Mwalimu loan. I would say I've benefited because we never struggled so much with school fees. And when I retired, I'm in my house. I would say my house, because that's where I live comfortably.
If there is a year that is giving me a lot of confidence, is this year. I'm seeing very interesting things, pretty good cash flows, a lot of on lending, very reduced, external borrowing. We no longer borrow. And of course, there is funding in terms of what we give to our members. So mine would be that the members need to patronize their Sacco more and be able to make it grow. But of course, of importance is that they ensure that they have a governance that is more sustainable, that is more inclusive, so that we ensure that the Saccos move to the next level.
So that was it for this particular episode of The Sacco Way. I'll see you next time. My name is Nina Shaban.